Hi, I'm Larry Berman, and here's what's on my radar this long weekend. Finally, it's about time. I can't tell you, everyone needs balance in their life, and my balance in the summertime is this. In the wintertime, it's hockey. So it's been a miserable year. There's no other way to say it. Depending on how you invest and what you invest in, it's been a great year. It's been a miserable 9 months for the gold market, for example. Key things of the week, we heard the Fed. The Fed just doesn't do this by mistake. They put out there that they've started to begin talking about or thinking about raising rates. And the markets handled it so far very, very well. So that's very interesting. But I do think it's a turning point at the Fed. Given that the market handled it well, we have to see how bond supply is digested in the next number of months, because that, to me, is the real big test of the market. We are seeing things that suffer from liquidity and that had benefited from liquidity started to come unglued. So all the high-flying names, they're all struggling, all of them. It doesn't matter, from Tesla right on down. The most important chart in the world is this one here. It's the German Bund, the 10-year Bund. This has been in a downtrend solidly, like most bonds around the world. But it was really the first major government bond beyond Japan, and Japan's been in this liquidity trap for even longer, that went to negative yields. Remember back 8 or 10 years ago, Mario Draghi, ECB, whatever it takes commentary, well, that started the push towards zero interest rates and negative yields, and right into Brexit, actually. So Brexit and the period around Brexit was the first time the German Bund kind of went to that negative territory. And then we kind of recovered, bounced, and then, of course, with the last few years and COVID in particular. But this decade-long pattern is broken. And we're just starting to see higher yields. We're almost at positive. So the 10-year German Bund is leadership for bond yields right now, and stress in equity markets. So most important chart there. Watch it if you can. It's going to be big. Another big event this week in terms of volatility. Listen, cash, money, doesn't go down 40% or 30% and up 40% in the span of a couple hours. Bitcoin had a crash this week and recovered off the kind words of some benefactors, I imagine. And as we get close to late Friday and governments continue to put out the word that they're going to legislate this stuff away and tax it and everything else, starting to roll over again. So there's a lot of late money coming to this. The ETF, craze for Bitcoin started back in February, and that caused a lot of money in. But I think there's going to be some big stress in the coin space in the span of the next couple of months as the Fed sucks out liquidity, as bond yields start to turn a bit positive, and as everyone thinks about recovering. Bull and bear pick of the week. Wow. So, what are you bullish on here? Well, within the crypto space, Ethereum seems like the better play compared to Bitcoin at this point. But I'm not saying go out and buy Ethereum, because that could get cut in half first before it has another decent rally. If you're going to play the long side here, there's not a lot that I'm fist-poundingly bullish. Even gold's had a good run, silver's had a good run. I'm very, very nervous. In our yield strategy, we're writing a lot of puts this month, 10, 15% lower. So we're buying dips, absolutely, but we're not aggressively bullish on anything at this point, unless you're talking about bond yields going higher. So the bull call of the week is to be bearish on bonds, bullish on yields. The bear call of the week is going to be just look out on everything that's illiquid. A lot of the ARC names, which are great companies 5-year view, great companies. Next 6 months, not so sure. Have a great week, everybody. Enjoy the beautiful weekend we've got in front of us, and be safe.